I, our perspective is more, I'll probably share with you what we are seeing with some of the transactions that have come through to us. I'll also respond to Mukhtar's comments earlier and say what we think the bank can do more to help drive some of these projects. We are new. We haven't made any commitments yet to infrastructure. We are about to, but let me give you a bit of a background about our fund, and so that it will help contextualize our role. We're a new fund set up late last year as a Nigeria Sovereign Investment Authority. We have $1 billion of seed capital, and we're going to deploy this across 3 funds. The first fund is the Stabilization Fund. The second fund is the Future Generations Fund, which is a classic savings fund. And then the third fund is a Nigeria Infrastructure Fund. And in trying to allocate capital across all 3 buckets, we've had to balance the need of the current generation, which is infrastructure, and the need of the future generation, which is savings. And so we've kind of allocated it equally between the 2 fund buckets and kept the Stabilization Fund at the minimum statutory allocation, which is 20%. Obviously, over time, as the government works through the 3 variables that drive our fund, we expect it to grow. And those 3 variables are obviously oil price, oil production, and the benchmark rate for the budget. Now, in terms of infrastructure, which is really where I'm going to try and illustrate some of our experiences, there are probably 3 things that stand out. And I'll echo Jean-Louis's comment earlier, which is project preparation. Most of what we have had have been things that have come as ideas. And even on the PPP side, what we have seen is some of the projects are fast-tracked. And when it's fast-tracked, the reality is that many things are not done properly. And so we found ourselves having to now back into trying to prepare these projects. We've had to allocate 1.5% of our infrastructure fund into a project development fund to actually help get these projects over to the line where we think is bankable enough for us to invest and also get other people to invest. So we've had to do that. Along the lines of doing that, we've had conversations with the bank to help with this project preparation funding. Our feedback to the bank is that the process is very convoluted and very long. And because of some of the timelines we're working with, it's been a little bit more challenging to assess some of these funds. And so even understanding how the fund can be assessed is not that simple. So I think it's important that it's made clearer to people so that we know what can be accessible to us and how quickly that can be. So that's what I think, as a bank tries to navigate between IDA and IBRD. The most basic thing is just simplify the story so that people know what it is. The second thing that we have seen from our experience, and this is something we're taking a leadership role to try and address, is the question of how to attract other latent, I don't want to use the word latent actually, but other pools of capital that ideally should be in infrastructure but are not participating. And by that I'm talking about pension funds and insurance companies. What is obvious to a lot of these people is, right, they'll invest in bonds that are obviously credit enhanced. What are the credit enhancement instruments? Are they cheap enough for people to participate? And we're driving a conversation now about, trying to introduce such products locally within the country in a way where the cost is actually not as expensive. And these are conversations which I think, obviously, now to your question, what the bank can do, a domestic solution to credit enhancement, I think, is very important. And we've seen it work in other places. Some of the things we've looked at are things that Indonesia has done as areas where we can actually use that to create a domestic market in project bonds that I think will effectively work. So it comes out, like I said, 3 things we have seen. One is obviously, accessing this project development fund, and we have had to create some small pots to help. But obviously, that's not something that is significant in itself. Maybe it gets us over the line on 1 or 2 projects, but not much more than that. But credit enhancement to attract that pools of capital is something that I think will be very useful in terms of addressing the landscape. Now, probably I'll leave my comments on when I look at what it takes in general to develop PPPs. I still think there's need for capacity building across the ministries that will drive PPPs. And here the bank has done an excellent job. I mean, teams led by some people in the room here from the bank have helped develop different pools of capacity and creating PPP units within the federal ministries that are driving them. We haven't got one at the federal level over the line yet, but when we do, I think that will serve as a template of how these things can work. And I think that this will be a big source of deal flow for a lot of people. Things that are coming, obviously, are still in segments that people view as very risky. Toll roads and toll bridges, those are very risky projects for a lot of external capital to invest in. And I think finding a way to de-risk some of those things or reduce the risk of some of those things are areas of collaboration between us and the bank. So the question I was put to me is, what do we need? I've kind of outlined it. A simplified way of accessing project development funding. Project development funding will be great to supplement what we have. Will be one. Two, a credit enhancement program that I think will help attract that pools of capital. And then finally, building capacity across the different parts of the government that's charged with PPP is very, very important, because even then, projects that come from them are not yet ready, and some of them are having to now be redeveloped by investors such as ourselves. So that's how we see our role, and maybe I'll just leave it here.
Okay.
Doing business in Africa, you can't afford to be without Africa Investor.